Artificial intelligence continues to dominate the market headlines. Some investors are asking, what else is out there? Today, we're highlighting two sectors that may offer an alternative. We're joined now by Drew Pettit, Director of U.S. Equity Strategy at Citi. Drew, thanks very much indeed for joining us. Before we get into sectors that may offer more promise, talk to us about AI and the question of AI spending. Is it in a bubble? You have a couple of charts for us. Start the case, if you would, with the data that indicates we are in a bubble when it comes to technology spending.
So it's funny, when we hear the bubble talk on AI, it's actually not really fundamental to us. It's actually in the price action. When you hear strategists talk about it feels like 1999, it's about the price moves being very aggressive for a couple years. But there's a big difference here today versus in the late 90s. It's that we actually have earnings and cash flow for these companies. So fundamentally, yeah, there is some deceleration ahead. You kind of saw that in the NVIDIA outlook given yesterday. But these are companies that are throwing off so much earnings. We actually think you can justify the prices on a lot of the big mega cap U.S. stocks tied to AI.
You have a chart for us, I think we can put it up, that shows the soaring portion of the US GDP accounted for by tech investment right now. Does that, I mean, obviously AI holds promise, but are companies overdoing it?
I don't think so. The issue here is it's not about the investment, it's what you get for it. A lot of investors, I would say financial markets in general, want that reward right now. But when you listen to company executives, yes, enablers get that reward now, people in the build out phase, but the adopters of this technology are going to talk about operating leverage. They're going to talk about their next 10% of growth is not going to have cost and labor growth that's going to be as aggressive. So you're not going to see it now. Technological change doesn't impact business now. It takes time to work that in. So operating leverage is key, and that's how we tie this back to stock fundamentals. Good growth on the top line should result in better growth on the bottom line.
Of course, there is a risk, isn't there, that AI won't deliver to the extent that people hope?
Always, 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 always. Look, if estimates for your big mega cap names keep moving up and to the right, these stocks should trade well. We think you should own them. It's if those out-year estimates for 26 and 27 start flatlining and rolling over, that's when we start to get concerned. But right now, those are the names that are seeing margin improvement, that are seeing estimates move higher, and are seeing secular, not cyclical, driven growth.
What sectors in the market do you think investors are neglecting?
It's funny, like there's two right now that really stood out to us. So it's financials, specifically the fintech names, and this wearable technology theme, which actually has a lot of healthcare IT in it. It's funny, we don't necessarily think you want to sell AI to buy these, but when you're looking to build out your equity portfolio, you need some growth and value. And we think fintech and wearable tech, so financials, healthcare, maybe add some utilities on the side, are a nice value balance for the AI names that are already heavy exposures in most people's portfolios.
But under fintech, you're including some stocks I think people wouldn't normally associate with that. BlackRock, Capital One, the card giant, Equifax, and Charles Schwab. I mean, they're not new names. They're not newcomers on the financial tech landscape.
Yeah, let's talk about maybe these are the OGs of fintech. You're delivering traditional services, but you look at how they've transformed their businesses. You know, BlackRock, again, it's bringing privates to market. Could privates find their way into 401k plans in the United States? They're pushing model portfolios, ETFs. They're delivering financial products differently. Schwab also enables that. You think about Capital One, again, a company that is all-encompassing in what it can offer. Again, more of a digital platform to a different type of audience. And even an Equifax, something that's typically tied to the mortgage market, might get a tailwind from falling rates. Again, tech is changing that business model. So it's not what they deliver, but how, and that's why they fall in fintech for us.
And those four that I mentioned, BlackRock, Capital One, Equifax, and Charles Schwab, investors should at least take a look at them, you reckon?
Yeah, again, value stocks that are a nice complement to your AI growth names.
And then give us more on the wearable technology, Boston Scientific and Medtronic. Again, hardly startups, they've been around for years, but give us the upside again in this wearable technology.
So healthcare is getting beaten up a little bit when you think about biotechs and even insurance companies in the United States. A lot of political risk there. Here in healthcare IT, you actually have had some names that have done well, like a Boston Scientific, Medtronic going through a turnaround, so two different types of stories. But the medical devices to help monitor health, keep people healthy, and to have better surgical outcomes, those types of devices, again, monitoring and tracking, end up being really important in the ecosystem regardless of the political outcome. When you look at our analyst estimates, they're above street consensus. And when you look what's priced into a lot of the healthcare IT and wearable tech names, not a lot of growth expected. So if you just hit numbers or even exceed them, you should have a lot more upside in these stocks.
Give us your, I may be on the first to do this and people will be shaking their head, but what about 2026? What themes do you think we'll see? I know we're still only in August.
Yeah, it's funny, like AI is still gonna be there to us. I think the key when you think about AI theme into 2026, we're probably gonna move away from the front end of the value chain, so semiconductors and a lot of the data center build out, to the adopters, the software names, which you're seeing working better now, and even some names that are going to be more users. Think of like an Uber or a DoorDash, those types of platforms that can use AI to make their business models even better. I think you're going to see the AI theme kind of transition and broaden out. Even thematically, just thinking kind of globally, it's going to go from just US trades to global trades. What we've seen since April is international AI stocks, the ones that are attractively priced to us, have been outperforming. And then marry that up with some of these value themes, fintech, fossil fuels actually coming off a low, wearable technology that we also mentioned. These types of themes that are going to see earnings inflect higher next year or reaccelerate, you end up getting a broadening trade in 2020. So it's not just about AI. So let's make sure the portfolio is diversified across growth and value.
You're a U.S. equity strategist. I know global stocks not your focus. I'm sure you pay a lot of attention to them. Is there any chance that we will see more of this so-called retreat from America theme because of unpredictability in Washington?
I'm not quite sure. I would say short term, at least, you're starting to see the euphoric sentiment start to fall and calm down around U.S. risk assets. What we're seeing globally when I think about our team is you are going to finally get contribution from Europe because you're starting to see some change in government spending there. Again, have to move past some short-term political risk with France. And then emerging markets are starting to kick in again. And again, that's where we're seeing a lot of tech names actually do really, really well. So it's not going to be an either or discussion heading into 2026. It's going to be what else is working if we want a healthier leg higher to a global bull market.
Thank you very much indeed, Drew. Always great hearing from you.
Yeah, thanks, Andrew.
Drew Pettit, Director of U.S. Equity Strategy at Citi.